Hello and welcome to the sample problem part of Chapter 4. At this point you should have already read the chapter, reviewed the PowerPoint that is out on Blackboard, and you should have already viewed the other video explaining the main concepts in the chapter. So today I am going to go over exercise 4.2 and 4.3. Again, exercise 4.2 and 4.3. And exercise 4.2 starts on page 107 in the textbook. And in this chapter, we move from posting to T accounts to posting to the general journal. And that is slightly different than the T accounts. And right up here, we have a copy of a general journal. And exercise 4.2 says selected accounts from the general ledger of Vizint Consulting Services follows. Record the general journal entries that would be made to record the following transactions. Be sure to include dates and descriptions in these entries. So let's take the first one, September 1st. Mary Vizint invested $50,000 in cash to start the firm. So the very first thing we're going to do up here is we're going to put in the year 2013. And we're going to put in September 1st. And now it says she invested some money in the business. So we know that two accounts are affected, cash and her capital account, Mary Vizint Capital. So cash is going up, and to increase cash we debit it. And then over here 50,000. So we debit cash and we're going to credit her capital account. And according to page 107 down towards the bottom, it's very specifically Mary Vizint Capital. We need to make sure we get those. Also for $50,000. Now, debits always go first, credits always go second, and credits are always indented. Always indented. And now, investment to start the firm. Okay, we always need a description. Now, because this is also in September, we do not need the second one, or we don't need September again. We just include the date. And then purchased office equipment for $5,500 on credit from Zen Inc. Received invoice 9823, payable in 30 days. Two accounts that are affected, office equipment and accounts payable. Office equipment we're going to debit because it's increasing, and we're going to credit accounts payable. And the amount is $5,500. And a description is purchase office invoice 9823, and I would also put in here that it's payable in 30 days. And I am having a heck of a time spelling today, so I apologize for that. Payable in 30 days. So now we know which two accounts are affected. The debit always goes on top and is right against this line, and the credit always goes second, and it is always indented. Always, always, always. Next one, September 16th. Purchase an automobile that will be used to visit clients. Issue check 1001 for $13,500 in payments. So automobile is the debit because we're increasing an asset. Cash is a credit because it's going down. We're decreasing our amount of cash, and to decrease cash we credit it. 13,500. And then this next part is purchased automobile. Check number 1001. Remember, our descriptions need to be such that someone can open up our books and look at it, and at just a quick glance can know exactly what this transaction is about. So 20, purchased supplies for $420 and paid them immediately with check 1002. Two accounts are affected. The first one is supplies, and the second one is cash. Cash is going to go down. So our supplies are going to go up by $420. And our cash is going to go down by $420. And this purchased supplies check number 1002. So let's keep going. On the 23rd, return damaged supplies for a cash refund. So we purchased some supplies and then some of them were damaged. So our cash is going to go up and our supplies are going to go down. And because our cash is going up, we have to debit it. So a great description here would be returned damaged supplies. So the next one, the first one on the 30th, it said issue check 1003 for $3,200 for Zen Inc. as payment on account for invoice 9823. So our cash is going to go down and so is our accounts payable. And to decrease a liability, we debit it. And our cash is also, so we're going to debit accounts payable and credit cash. And we decided this was for $3,200. And payment on account, check number 1003. So one of the very first things here is that's so important is decide which two accounts are affected, and then decide, are those accounts increasing or are those accounts decreasing? Now I've ran out of room here, so I need to go to my next page. And look, it's already labeled page 2, but up here I have to go and I have to put the date, the year, the month, and we are still on the 30th. So next one, withdrew $2,000 in cash for personal expenses. Withdrew cash. So cash is going to go down. So when we credit cash, it goes down. So that means Mary Vincent drawing and cash. We're going to credit cash because it's going to go down. And $3,200. Withdrew cash for personal expenses. Okay. Next one, issue check 1004 for $1,200 to pay the rent for October. So we debit expenses, assets, and draws. So in order to increase our expense, so we have additional expense, we debit it. So rent expense. And that is for $1,200. Our rent expense, and our cash is going down. And a description would be paid monthly rent, check number 1004. Next one, still on the 30th, perform services for $2,250 in cash, meaning our revenue, our income is going to go up. So our cash is going to go up, so we debit it, and we credit fees income. And for the amount listed, $2,250. performed services for cash. 30th, last one, paid $3,800, excuse me, $385 for monthly telephone bill, check 1005. So we debit expenses, assets, and draws. So we're going to debit telephone expense for $385. And we are going to credit cash for $385. Then we go and put in our description. So paid monthly telephone expense, check number 1005. Okay, so now we have just completed exercise 4.2, and now we're going to look at exercise 4.3. 4.3. So this one says, post the journal entries that you prepared in exercise 4.2 to the general ledger. Use the account name shown on exercise 4.2. So for every single account, we are going to have a ledger. So for example, here's some blank ledgers. And if you look on the bottom of page 107, it has a list of accounts and account number. So we would have cash, and its account number is 101. And we're just going to keep going down this list. So this ledger is where we are going to keep track of the account balance. So back on here, over here on our general journal, this is a record of all of our transactions, but it does not keep track of any of our account balances. So over here on ledgers, we are going to keep track of our account balances. So accounts receivable, and I'm going to do this for every single account that is listed here. And I'm just going right down the list for the amount that is listed on page 107. I'm just going right down that list. So supplies, equipment, okay, and now I've got to move to my next sheet. And this process that we're going through is called opening the ledgers, and you will see that throughout the textbook where it mentions go and open the ledgers. Automobile, now accounts payable, and just keep going down. I'm going to pause the video and finish out, and I would like you to go ahead and finish out also. Just keep listing out the accounts and the account numbers. Okay, so now I have all of my ledgers open. Every single one of them has an account title and an account number. Now we are going to go through the process of posting our general journal transactions to the ledger. So let's take a look and see what that looks like. Let's start with this very first one. So we start here, and it has a cash, and it has a debit of $50,000. So now we go and we find our cash ledger, which is right here. We start out with the date, we start out with the month, and the day that that transaction happened, which is the 1st. And our posting reference is J1. What does J1 mean? General Journal, page 1. And we had a debit of $50,000. And now, after that transaction, our ledger has a balance of $50,000 because that's the only thing that takes place in that account. So right over here, our balance is $50,000. But we're not quite done yet. We have to go and we have to take this back, this account number, and go put it in the posting reference next to that general journal. So I'm going to take this number right here, I'm going to highlight it, and I'm going to take it right back over here and put my posting reference to show that I have just done the entire process. Now, out on the Connect Accounting website, this is slightly different. There aren't any posting references, but you will need to know how to do this by hand. So we are going to practice it out by hand when we do it out on paper. There's also a great big project coming up that you will also need to be able to do this by hand. So next, Mary Visent Capital. We now need to post this one. So we are going to go and post a $50,000 credit out to Mary's account. So let's go find Mary's capital account. And look right here. Start out with the date. Start out with September 1st. The posting reference is J1. The only time we need to put a description in is if it's something unusual. And most in this textbook we just don't use a description column. Oh, excuse me. And we had a credit. We had a credit of $50,000 in that general journal. And now after this transaction, what do we have? We have a balance of $50,000. Now, I'm not putting zeros in this debit or this debit column right here, this one or in this one, but out in the Connect Accounting website, you are going to have to put zeros in those fields or it'll mark them wrong. So the last part of this is this 301. This 301 has to go back to the general journal. 301. Let's look at the next one. Office equipment on September 4th. So we need to go post this to the office equipment general ledger. So let's go out and find the equipment. We are going to start with our date. We are going to start with a date. Posting reference is J1 for general journal 1, and the debit was $13,500. And now the balance in our equipment account after that's been posted is $13,500. And now we take this account number and we go back and we put it in the general journal of 131. And I can't stress to you enough, you just have to go through these one at a time. I know it's a tedious process. Okay, accounts payable. So let's look, and we need to do a credit of $5,500 to accounts payable. Accounts payable, again, open the date. J1 for general journal 1, and we decided it was a credit of $5,500. So right now our balance is $5,500 because there's no other transactions in this account, so there is no that balance doesn't change. 16. Purchase an automobile that will be used to visit clients. Issue check 101, $13,500 is our next transaction. So, oh, I forgot my posting reference. Accounts payable is 202. So our next transaction is this automobile purchase. So we have a debit here on the automobile, so we're going to go out and post that to the ledger. J1, General Journal 1, and it is a debit for $13,500. Again, debit for $13,500 is the balance in this account. This is the balance in our automobile account. 141 is our posting reference, so we go back here and do 141 posting reference. Cash, we wrote them a check, so we have to go post this cash out to our general ledger. So let's go and look. Let's go find cash. And the date on this transaction is the 16th. It came from General Journal page 1, but this time it's a credit. We're crediting cash. So the account balance in our cash after this has been posted. This was a deposit. This increased our cash. This is a decrease. We wrote a check. And so the account balance is $36,500. And then our posting reference has to go back to right here. Okay, one more. So supplies. We are debiting supplies and crediting cash. So let's go do this supplies. 2013, September. And it's dated the 20th. And we decided that it was a debit for $420. So that means the balance in our account is $420. So supplies. Oh, look, we forgot our posting reference, 121. Oh, we forgot the one here too. So this should be J1, and then we take the 121 back to here. One more account, cash. We have a credit of $420 to cash. So let's go find our cash account. This is the 20th. We're still on General Journal 1. $420. So we have a debit balance. We're posting a transaction for a credit. So our new balance is $36,080. Remember, this is the running balance on this account. And then we need to take our posting reference back over to here and do 101. Okay, so now here's what I'm going to do. I am going to pause this video and I'm going to bring up the answer, and then I'm going to very slowly click through all the screens so that you can see the answer, and you need to continue to work through the problem until such a time that you can figure out where things go and how this is being posted out to the ledgers. Okay, here is what your cash should look like, your accounts receivable, your supplies. When you're all done posting all those general journal entries, this is what it should look like. And look here, these say J2, that means it came from General Journal page 2. Look, an accounts receivable, we didn't even use it, but we opened up that ledger. So if you need to spend some more time on these, just hit pause on the video, and I'm going to keep going through. And this is what your ledger should look like after all the general journal entries have been posted. Again, pause the video at any time that you need to. Okay, and this sample problem should help you finish up your homework out in the Connect Accounting website. As always, there are video tutorials for part of the problems out there, and I am available via telephone, office hours, or telephone. You're more than welcome to stop by at any time, and I will help you in any way I can. And I hope you have a great day.